So I am Dylan Lean. I'm a senior manager in our state and local tax group. I am based here in Minneapolis, lovely snowy Minneapolis, and I'm going to walk through some things that we're seeing in the sales tax world, some updates, some things we're talking to our clients about. And then Kim and Bridget are going to kind of chime in on some of the automation and technical aspects that clients are engaging with to try to tackle all the kind of uptick in compliance that has been driving a lot of the conversations as it comes to sales tax in the past few years, which I will get to in a second. So with that, so here's just kind of a quick agenda. Gonna do a quick update on state budgetary projections, talk a little sales tax nexus, get into the automation piece, and then some of the trends that we're seeing in sales and use tax, and then kind of a look ahead, what we're kind of monitoring over the next couple of years. So with that, I'm going to dive into just the state of the state. So I like to start presentations with kind of talking about state budget projections, and it matters because where a state's sitting from their budgetary perspective often drives a lot of tax policy. So if you can imagine, if a state is in kind of deep in the red and they need to raise revenue, you could potentially see more tax increases. And at the outset of the pandemic, there was kind of this expectation that there was going to be these huge declines in revenues and states were going to have to potentially raise taxes to kind of close that gap. Well, fortunately, that really hasn't happened for a number of different reasons, where states actually have kind of increased the revenues that they've collected. And hopefully this kind of rosier budget perspective allows states that maybe have less rationale to kind of push for tax increases. Doesn't mean that they won't, but there'll probably be less rationale and less appetite for it in the upcoming legislative sessions in most of the states. So what's interesting with this phenomenon is, first, sales tax collection, a lot of it just really shifted online. Now, prior to the pandemic, we have been talking about this shift from brick and mortar to online, but clearly the pandemic accelerated this, and not only just more people buying the normal stuff that they would have bought at stores online, but also expanding to different sorts of food delivery, that sort of thing. And so states have seen their sales tax collections increased. Additionally, inflation plays a role in this too. If you think about it, higher cost of goods, that can be a higher tax base for which the tax is collected on. And then also the passage of some economic nexus provisions, which I'll go through in a second, that allowed states to require online retailers to collect their state's sales and use tax. So the timing was good from a state perspective. Personal income taxes, you have a little mixture here of, there have been job losses, but that was disproportionately impacted on some of the lower income workers. Higher income jobs have actually seen kind of an uptick in salaries as this, labor market has been strange, but also kind of hot as well too when it comes to people getting salary increases. Property tax, a little bit of a mixed bag. If you happen to own a house, you probably have seen your, assessed value increase quite significantly. And so in the residential space, you're having higher kind of basis for property tax collections. Commercial property tax is a little bit of a mixed bag. You have store closures, you have less emphasis on kind of commercial office space as well too, as people are going remote. So we'll see where that one kind of lands. But overall, states are in a good position when it comes to their budgets. Therefore, we're not expecting a lot of states to be overly aggressive when it comes to passage of potentially new taxes. So with that, I'm going to talk a little bit about sales tax nexus. This is that kind of economic nexus, that economic collection requirement that I was mentioning previously, that this drives a lot of the conversations that we're having. It's going to drive a lot of what Kim and Bridget are going to talk about. So I think it kind of makes sense to just level set as to what this means in case those on this call haven't, worked regularly in sales and use tax. So when I say sales tax nexus, I mean a collection requirement. Basically, if you have nexus, a state can pose a collection requirement if you are selling taxable items in that state. So a perfect example, and as long as I've been practicing, is the physical presence test. if you're physically in a state, you need to collect and remit that state's sales tax. If you recall, at one point in time, if you ordered something on Amazon.com, you might have not been charged sales tax. That's because, 10 years ago, Amazon was just in Washington and maybe a few other states. I know in Minnesota, when I would order something online, Amazon wouldn't collect the tax because they had no requirement to collect Minnesota sales tax because they weren't physically here. And Amazon changed to collecting Minnesota sales tax when they put a distribution center in the state, I think around like 2013 or 2014. And so again, you can have a collection requirement if you're physically in a state. Well, that all changed in 2018 with the kind of landmark Supreme Court case, South Dakota versus Wayfair. South Dakota passed an economic nexus law, basically saying, we don't care if you're physically in our state or not. If you have enough volume of sales into our state, we can require you to collect our state sales tax. And they passed a law that said if you have over 100,000 in sales or 200 individual transactions, you have to collect South Dakota sales tax. Well, this made it all the way up to the Supreme Court. South Dakota ended up prevailing, and their law was deemed a valid law. And obviously, other states were taking notice of this. And since 2018, in that landmark case, every single state with a sales tax has passed economic nexus provisions. And you'll kind of see with this chart, states do differ as to what the threshold is to require you to collect tax if, again, you are selling a taxable item into that state. And it's not a coincidence that 100,000 is kind of a common kind of low kind of a benchmark for states, because a lot of states looked at South Dakota and said, well, we don't want to go lower than the 100,000 in case our law could potentially be challenged. So 100,000 is usually the starting point. A few other states have higher thresholds, 250,000, 500,000 in sales. So again, it can be a state by state analysis. Also, this calculation is annual. Some states use calendar years, some states use a rolling 12, but just kind of be aware that 100,000 is kind of a good kind of starting point to say, okay, we might have nexus in this state. But also don't get tripped up on the states that have just the transaction, the 200 transactions. You could sell 200 keychains for $1 a piece and have potentially win over nexus in the states that have that transaction threshold. And so if you can imagine going from a place of where physical presence would be the only test that would give you sales tax nexus to now this economic nexus threshold, a lot of businesses who are maybe filing in 1 or 2 states could end up in filing in 5, 10, 20 different states. And it can happen rather quickly. And who has the staff to kind of, deal with all these filings? Because often sales tax is monthly filing, some are quarterly, but now you're dealing with a lot of volume, increased volume. Additionally, when you register and collect the tax, you might be getting different notices from the state. So tax departments have definitely had to do a lot more with less, in addition to some of the kind of issues with the labor market. So we engage with talking to a lot of clients about this challenge where they did an analysis and they found out that they have a collection requirement in 20 states. And not only that, each state differs as to what can be taxable and what's not taxable. So tack on an additional kind of review of their items for taxability purposes, and you're just looking at a lot of work. And so Kim and Bridget are going to kind of touch on how that can be accomplished within your tax department. But before that, I have a few other things to go through. Polling question 1. What aspect of sales tax compliance do you find the most challenging if you are involved with the compliance piece? Is it to determine the taxability, as I talked about? Is it some of the automation type tools and having that kind of run smoothly? All the audits that might come with additional compliance? Is it the filing the returns? Or is it monitoring the sales and use tax laws, the changes in rates, or other? Yeah, that definitely makes sense. Doing a lot of kind of taxability projects, it can be quite interesting that one state can define a candy bar differently than another state. So it can get quite detailed in those reviews. So then we talked a little bit about Nexus. Well, what does this mean now in this kind of virtual economy, this Zoom economy? What are some of the challenges that businesses are facing? As mentioned, we're seeing more of a shift online. So you're seeing more volume online. But in addition, there was a surge in brick and mortar stores as well, too, just as part of, I don't know if it was related to the stimulus or other kind of increase in funds that people were using for spending. But again, it goes to show you that we're just seeing businesses having to deal with more transaction, more sales, and now having to deal with kind of the economic nexus compliance that goes along with that. So again, it's just a real challenge for businesses of all sizes. And this is just kind of a reminder that, again, it's just, you're dealing with more compliance, more audits, more taxability determinations, and how do you tackle all that? And then in addition, it goes to how we work, as in people working remotely and how that can trigger Nexus. So as I mentioned, if you're physically in a state, you might have a collection requirement in that state, and having remote workers is usually a pretty big trigger for states. And so if you have people that can work in a state that you've never collected sales tax before, then you can throw out the economic nexus 100,000 in sales test because you're physically in that state. States did have some temporary provisions when it came to, some states did anyways, temporary exemptions for nexus creating activities if you had an employee in that state. Most, if not all of those, have rolled off now. So if you were kind of using that as kind of an out to not have to collect that state sales tax, most, if not all of those, have gone away. So just to beware of that. So in addition to some of the economic nexus provisions, states married that to what are called marketplace facilitator laws, where states passed laws that basically said, if you are a marketplace, we want to make you be the central point of collection. So targeted at the Amazons and the eBays of the world that basically say, we don't want to audit all of these small sellers on the platform. We want to require eBay to say, collect all the tax. It's just easier for us to make sure there is compliance versus having to, chase down all these small sellers. And although maybe, people on this call don't work for the Amazons or eBay of the world, any business could fall under these provisions if you have, one, a marketplace, which is a website, and two, typically if you are collecting the funds. So if you have your website and you also collect the funds, take your kind of commission and then give it to the third-party sellers, that can make you a marketplace by definition under these new laws, and you have to then be the central point of collection. So it's something to consider that even though you're not a kind of traditional marketplace, if you have a website and you have third-party sellers on there, you may fall under that provision and have to require and collect on behalf of the sellers on your marketplace. And again, similar to the economic nexus provisions, all states with sales tax have kind of married these up as well too. And the one thing to just note that although a lot of states' marketplace facilitator laws look similar, states do have different provisions. One that comes up a lot is kind of Uber Eats and the Grubhubs of the world, that states have had some challenges when it comes to their local taxes, when it's who's supposed to collect what. Is it the restaurant? Is it the app that's supposed to collect it? And you have some instances where Uber or Grubhub has to collect the tax, but the restaurant still might have to collect like a specific local type tax, because restaurant taxes can be a little different than sales taxes. And so it can get a little messy. So again, I would advise, if you do have an online marketplace, to kind of either reach out to iBailey or to at least kind of look at that state's rules to see what, if anything, you need to be doing from a collection requirement. And then kind of lastly with this section, I know that a lot of companies are dealing with either supply chain issues or labor shortages, and this can be a challenge from a sales tax compliance perspective too. One, if you're just having labor shortages, you're having, again, to do more with less people. But also if you're dealing with new suppliers or new products, That goes to a taxability analysis too, where if you're selling, a certain widget and then you have to change your business model to sell something else because of supply chain issues, well, you then need to kind of confirm the taxability of the new product that you're selling. Same with new vendors, or you have to issue new resale certificates. And so again, there's more work that is involved with kind of clogged supply chains. And then if you went to more of a dropship model, there's different paperwork that's involved with that when it comes to getting the proper resale certificates. The rules can be a little different as to who's required to collect the tax when it comes to some NEXUS type issues. And then lastly, too, refunds, it's something to consider. Now, if you've over collected the tax from your customer, technically you can get a refund, but that money then has to be given to your customer. So I don't see a lot of businesses kind of going that route to get the money back, only to kind of hand it over to your customer. But if it's items that you use in your business that you're the end payer of tax, maybe there's an exemption there. Maybe you were paying tax on manufacturing equipment. Yeah, you can definitely go back to the state and get a refund, at least within the last 3 or 4 years. You can't go back 20 years, but you can go back a couple of years. So it's something to consider as well too. So with that, I kind of set the stage for all the compliance challenges that companies are facing, and additional filings and how you handle all that, labor shortages. Kim's going to kind of jump in and talk a little bit about how automation and ERP can assist with that burden. So with that, I will hand it over to Kim.
Thanks, Dylan. So I'm Kim Hitchcock. I work for Eide Bailly. I'm a solutions engineer here, working in the NetSuite space. What I want to talk about today is just talking through how a software, an ERP software, can help automate sales tax processes for you. But first, let's talk about what is an ERP. That might be a new verbiage that a lot of individuals haven't heard. But an ERP is a business process management software that manages and integrates companies' financials, supply chain, procurement, and daily operations, as well as reporting, and eliminating that need for multiple systems. What that's going to provide you is better data integrity and give you a better, robust system to manage your business processes and improve efficiencies throughout the organization. Some of the sample ERP softwares that you may have heard in the past is Sage Intacct, Microsoft Dynamics, and NetSuite, just as a couple of them. In this webinar, I'm going to focus on NetSuite as the platform that we are talking through to discuss how the ERP system might be able to benefit you and automate a lot of processes to improve sales tax collection. So first, let's talk about automation. So within automation here, you can understand that an ERP system, by eliminating the multiple systems, you're going to be able to eliminate bottlenecks and manual processes. What that's going to do is give you efficiencies across the board in many of your different functions. You're also going to get embedded dashboards with real-time analytics. So as you're looking for information of, as we talk through NEXUSes and sales in NEXUSes, you're also going to be able to get that information within your ERP system on a real-time basis. NetSuite also has a built-in workflow, which is going to help you automate processes, orchestrates approvals, and it's going to enforce those rules so that your employees are always going to have the ability to come in and say, okay, I'm able to do an approval. I'm going to approve this. It's going to track that approval through an audit trail for a true end-to-end accountability. It's also going to allow you to do tax calculations. So within an ERP system, you're going to be able to have tax automations at both the transaction and transaction line level to be able to say, okay, here's what my item master is recording my tax at. Here's what my customer master is recording my tax at. And it's going to do those sales tax calculations inside the system for you to be able to record that. You can go back to any one of those transactions at any point in time and see what the tax calculation was. You're also going to be able to report on it within the system through the native reporting within NetSuite. NetSuite also has an embedded audit log. So on any record within the system, you're going to be able to see under system notes who created the transaction, if there was any changes to the transaction, when those changes may have occurred, what the old values are, and what the new values are. That's going to provide you that automation for any types of audits and just being able to go back in time and look at the data that's within the system. Reporting. As we talked, NetSuite's going to have robust reporting at your fingertips. Each of the roles within inside of NetSuite have predefined dashboards. These dashboards are going to be industry specific. They're going to have the right KPIs that each user needs to look at on a daily basis. All of this information is going to be coming from one single source of data and allow you to look at it. NetSuite has predefined reports. It has the ability to create additional reportings of things that you might want to see. It also has built-in visuals and analytic tools at your fingertips to be able to pull all of this data together for full reporting and functionality that you need. Document retention. This is a big piece for an ERP system. Oftentimes we notice that customers have documents that they want to retain, or they have paper trails of things that they want to be able to report on or go back and look at. So they have these large file cabinets just sitting in different rooms full of paperwork. NetSuite's going to allow you to reduce the amount of physical papers you have by allowing you to have those documents, store them within inside of the NetSuite platform, and associate them to the appropriate record. So for example, if you need an exemption certificate on file for that customer, you'd be able to have that customer send over you the exemption certificate, or even scan it in and attach it right to the customer record. So as the users are looking at the customer master, they're able to pull up the tax certificate right then and there within the ERP platform. These are just a couple examples of how NetSuite is able to assist you with automating your taxes by providing you with, eliminating bottlenecks by providing you a single source of data, eliminating extra external systems that you might be managing. It's going to allow you to have reporting within one database so you can look at everything as a whole and report on those KPIs and metrics. It allows you for audit trails and system notes. It allows you for document retention. So here is our polling question for the ERP section. An ERP system can help with building in workflow and automates processes, orchestrates approvals, and enforces rules. Is that true or false? That is correct. NetSuite has built-in workflow automation that'll provide you the ability to create approvals and enforces those rules systemically inside of the platform. And with that, I'm going to pass the microphone over to Bridget to start talking about AVALARA and tax compliancy.
Thanks so much, Kim. Hi, everyone. I am Bridget Merton with AVALARA, and we have partnered with Eide Bailly for probably over a decade to provide enhanced sales tax automation compliance. And I'm really excited to be here and talk to you about this today, how automation can help with all of those items Dylan was talking about earlier in the presentation. So with that, and what we heard from Dylan, what are the top tax challenges that companies are facing? And I think this really goes hand in hand with our first polling question today about the top challenges that everyone on this call faces, keeping up with the taxability of products, right? And keeping up with that, you're trying to keep up with the tax laws and jurisdictions, and that's everyone's #1 challenge. And what is really great about AVALARA and using an ERP system is that automation makes that easy to keep up with. You know, truly without automation, with Wayfair and, economic nexus in so many states, no human could ever keep up with that. Which leads to inaccurate tax calculations, difficulty managing those exemption certificates. Salespeople might have them on their laptops or Someone else is storing it, in their email or in a file cabinet. So things are just all over the place. So automation really helps us get a handle on these tax challenges. So what does this mean for you? All these changes, you're dealing with labor shortages, maybe you're implementing a new e-commerce system, just in your day-to-day work, you have a lot going on. And with these additional sales tax changes, that could mean you're spending more time managing these new requirements. You might possibly have sales tax exposure that you didn't know about, and your processes are not scaling. And most of all, is it keeping you up at night? Or when you wake up early in the morning, are you thinking about, oh God, am I charging the right sales tax? Is that going right? Do I have those exemption certificates, right? Like no one wants to be thinking about sales tax at those times. So automation can really help you make sure you have a process in place and get rid of that fear of the unknown. So for those of you who are not familiar with Avalara, we are a software company and we offer end-to-end tax compliance for companies. So what does that mean? Well, in the first box here, we offer sales tax calculations. So we can ensure that we are calculating the correct sales tax rate at the time of invoice. This is based on the product taxability, the ship to ship from address, just making sure all of that is creating the right calculation. Then that information can flow into the returns console where your returns are automatically filed and payment is remitted to the states. We also handle document management, exemption certificates, W-8, W-9s as well. And really important to something that Dylan was speaking about, we have a lot of reporting and insights into your sales tax information. So at time of audit, you can provide those reports to the auditor. And we all know that the less amount of time the auditor is at your business, the better, because you want them in and out of there, not hanging around trying to find things that they could maybe charge you for. So what are a few reasons to automate sales tax management? Accuracy. Are you getting that right tax rate? Are you, in certain states, let's take SaaS software as an example. It's taxable in about 15 states, not taxable in California where I live. Are you getting that right? A lot of people who start software companies in California just think it's not taxable anywhere, right? They don't have that view into the rest of the United States. So you need to make sure that you're charging accurate sales tax. It's efficient. It really reduces your cost and time spent managing sales tax, right? Like a NetSuite does in your day-to-day life with your business, sales tax automation just increases that efficiency. Risk management, you'll have those reports ready for the auditors, your information will be correct. Your customers will be happier. You're charging the right sales tax rate. You're collecting that exemption certificate in the right way. It just kind of ensures happiness all around the sales cycle. And this allows your business to grow, free up resources. Maybe you had a couple of employees that were spending time on sales tax. You could automate this process. And then now that employee can focus on other things that can possibly generate revenue for your business and allow your business to grow. Because no one wants to be spending their time every month delving into sales tax, except for maybe Dylan, the expert on it. So what sets us apart? These are things that people love about our software. Economic nexus monitoring. This will, once you start using Avalara, there'll be a heat map that'll show up and say, hey, you've sold this much into Texas, you're at 450,000, you might want to look at getting registered in Texas. So when you hit the threshold, you're ready to go. More accurate tax rates. We use the exact address. If there's not an address, maybe you're in an oil area or you just don't have an address, we can use the lat long to get to that accurate tax rate. We manage thousands of tax rates and rules that are updated automatically, so you don't have to know what's going on with the rules. Automated filing, of course, and compliance. I don't think anyone really wants to file 25 plus sales tax returns a month. And then you have this one point of accuracy for all your sales tax. So Avalara, we actually have over 1,000 pre-built integrations to NetSuite, to QuickBooks, Sage Intacct, Microsoft's Sage, Magento, so Salesforce. So we can accurately calculate the sales tax rate the whole way through the sales cycle. People are selling in an omni-channel environment right now. And so you might be selling at your store and you added in an e-commerce element. And so through all of those different ways that you're processing invoices, Avalara can ensure that there's one correct sales tax rate the whole way through. We are designed for global commerce. So I have been at Avalara for 7 years, and wow, has sales tax changed over those last 7 years. And with that, so has global commerce, right? The world is getting smaller. People are selling cross-border. And so in the last couple of years, Avalara has made a handful of acquisitions around global commerce to ensure that we can also calculate cross-border sales tax, VAT, GST, so we can help you around the globe if your business chooses to move there. Avalara has been around for over a decade. We're a public company now. We've really grown by leaps and bounds. So we have to get this right. If we are getting the sales tax rate wrong, it's not good. So, we have to get this right. We're battle tested. We have thousands and millions of people using our software to give you peace of mind in your business. So what if you're not calculating sales tax? You might need to then handle exemption certificates, which Kim referenced and Dylan as well. So this is a little bit different than sales tax. You need to have this as proof that you don't need to charge sales tax. And if you don't have this exemption certificate, that can be a big risk during audit. The auditors know that exemption certificates, we kind of call it the low-hanging fruit of the audit. And this is where they can, nail companies much more than on an incorrect sales tax rate during audit. So make sure you have these in order. We have an amazing tool called Cert Capture that will go out push out email campaigns into the people that need to produce the exemption certificate for you. You get that back. We store it in a system and have a whole automation process around that. So this is a really great product if you are dealing with exemption certificate management. So just to touch again on a lot of solutions, if you are familiar with Avalara, you probably know us for AVATax and our sales tax calculation and returns filing solutions. But beyond that, we've really grown. And so we also handle consumer use tax. This we handle inside of NetSuite and many other ERP systems to help you out with that side of the business. Going globally, we have cross-border, which when you buy something, we have one of our business development people is in Canada, and he wanted to purchase like a GoPro. I noticed that when he was purchasing it, it was like $100, but to get it into Canada, it was going to have a cross-border, additional charges of like $50. So our solution will put that in the shopping cart at the time of purchase, rather than finding out that you have to pay that additional money when the items come to your house. So we have classification codes and other cross-border functionality. We have VAT reporting for Europe and other parts of the globe, and global e-invoicing as well. And we're in different areas. So obviously e-commerce, retail, everything with sales tax, but we have a few specialized solutions for hospitality that deals with hotels and lodging, Airbnbs or VRBOs. And then Avalara for communications. I like to point this out because I think there's a very fine line between Avalara for communications and sales tax, especially around the Internet of Things, or you might have a Fitbit and then you're also running an app with it, or maybe a bike, and you're streaming workouts. So that kind of crosses the line in between communications tax and sales tax. So something to be on the lookout for as well. And we also have a bev alcohol product. If your business happens to be in wine or beer or other alcohol, that can do new shipping verification and registrations and handle all of the excise tax around that. And an excise solution, oil and gas, and this also covers vape as well. And a couple new products, personal property tax management solution, as well as enhanced capabilities for VAT. There's a couple questions, yep, in the chat. So I'm gonna go to these. Absolutely, Avalara does provide assistance with international tax laws. Thanks for asking that as well. So that is kind of the world of how Avalara has expanded in the last 7 years. Okay. So now on to our third polling question. Which of the following would be the biggest reason for your organization to automate sales tax? Efficiency and time saving, accuracy and risk management, customer satisfaction, business growth, or you're already using an automated solution. So while this was going, I was really thinking about automation in my own life and how, I've automated my life during the pandemic, as I'm sure many of you have automated your businesses. And I was really thinking about, using Target Drive Up, right? Like I was using it a little bit before, and then now, like I can't, it's just really revolutionized my life, right? Like I can order my groceries or anything I need quickly. I pull up there, they pop the things into my car and I move on. And most importantly, I'm not going into Target. So I'm saving money. So it's really efficient, time saving, avoiding risk. Who knows? I went into Target in person a couple of weeks ago to buy like something for my kitchen and I came out with a patio set, right? So automating my whole shopping experience with Target is really helping me in my life, which I thought is kind of a interesting parallel, totally different than sales tax, but just showing how automation can really help you be efficient and save time. I'm making more accurate grocery purchases. So anyways, that's how I kind of like to think of our software, right? We're just helping people, automate that aspect of their business. Okay. So most people are choosing to automate for efficiency and time savings and accuracy and risk management. That was number one. Great, thanks for your feedback. Now I'm going to turn it back to Dylan.
Thanks, Bridget. And yeah, on that note, the drive up is a huge lifesaver when it comes to we got a couple young kids and having to take them out of the car seats and to be able to go in. So that definitely has been a real benefit. But if you think about it, this also provides challenges for retailers in the fact that it's easier when you just had a brick and mortar store and you were able to collect the sales tax rate of where the store is located, because that's where individuals would actually pick up the items. But now if you're kind of delivering to people's homes, like grocery delivery, you have to contemplate the rate in which it's actually being delivered to. So again, here in Minnesota, in Minneapolis, we're close to the border of Wisconsin. Well, if you deliver into Wisconsin, well, now you have to get the rate right, the taxability right too, where maybe soda is taxable in Minnesota and in your border state it's not. So again, although it's being more convenient for customers, it provides a bigger challenge for businesses in the tax collection space. So to kind of wrap up here, I just wanted to touch on a few trends that we've been seeing over the last few years, and we expect to kind of continue. Really the biggest thing outside of NEXUS that we see is these city and local taxes. Those continue to expand, where cities are, maybe it's not even a sales tax, it might be like a bag fee or other sorts of kind of fees to drive revenue for the city. And for example, the city of Chicago has, I think, roughly 30 standalone taxes between bottled water taxes, different lease taxes, different rental taxes. And I mention this in part because if you're a business and you're expanding to a new market, specifically larger metropolitan areas, you might have additional compliance, not just from having to collect a higher sales tax rate, but you might have other fees and returns, and there's just more and more volume of that. It's not going the other way, it's increasing. So again, we get just a lot of calls about different cities or notices that businesses are receiving. States aggressively enforcing NEXUS. Yeah, there's the economic nexus that states are looking at, but they're still looking at physical presence as well too. One kind of specific example we have seen is businesses that are using fulfillment by Amazon, where they are kind of moving around your inventory. And if Amazon moves your inventory into a state, that could trigger a physical presence. And we have seen states that are either auditing Amazon or subpoenaing the records for Amazon to see who those third-party sellers are and could send a notice. We've seen a couple of these notices saying, hey, you have inventory in our state. We see you're not registered. You might want to go ahead and kind of get registered for sales and use tax. And on that, states are using more data mining as well too. They're getting more sophisticated, using the data that they have to send out more notices to increase compliance. The biggest issue, the one that we see the most is states looking at withholding data to then send NEXUS questionnaires for either sales tax or income tax, because they can look and say, hey, company XYZ, we see you have an employee in state because you're withholding some from their paycheck. Well, that gives you physical presence. Here, fill out this questionnaire, and we might come audit you as well too. So a huge kind of just uptick in notices, and that just kind of goes to the points that Kim and Bridget were making, that there's just so much to do that without automation, at least some part of the function, it's hard to find enough people to be able to tackle all of this. I had mentioned kind of the temporary rules before, that those are starting to unwind. I guess the idea was this pandemic was supposed to be maybe over a year ago, and it's continuing, but a lot of those emergency provisions, at least in the sales tax world, have kind of started to roll off or have kind of gone away completely. We are seeing states address their NEXUS provisions, mainly to remove the 200 transactions, because again, you can capture some really small sellers if they're selling $2 or $3 items and they sell 200 of them. Well, now you have a taxpayer that has $600 in sales. Does it really make sense to have them register, collect, and remit $30, $40 and then maybe get audited as well too? So we're seeing states just kind of looking at probably to drop some of those. And also it's kind of cleaner with just the revenue versus the transactions, because what is the transaction? If you have 12 payments for an annual contract, is that one transaction or is it 12? And states have been kind of challenged as to how they define it. So again, we've seen a couple states kind of move in this direction. I would imagine maybe a few more will look to kind of drop that provision. Aircraft, if you have a business that has an aircraft or you've advised a business with aircraft, we see a lot of eyeballs from states on aircraft, in part because big ticket items, if there's an aircraft that was $20 million and sales tax wasn't paid at the time, then all the state has to do is generate an audit notice, and if they can show use within the state, they could potentially have a couple $100,000 assessment on the aircraft. Now, there are instances where you can maybe purchase a aircraft for resale and then have kind of a lease structure. But again, states are sending out more notices, more eyeballs on aircraft. So again, if you have an aircraft within the structure, you might want to just look to see where are you paying tax? Did you pay tax? What are we doing with the aircraft? Where is it going? Because it's better to kind of button that up before states kind of call you and say, oh, looks like you didn't pay any tax. Here's a bill for $200,000. Gross receipts taxes, this kind of falls between kind of an income tax and a sales tax. There are some states that look to just your total sales and not net income, like a Washington B&O, Oregon commercial activity tax, Ohio commercial activity tax. So be aware that in addition to sales tax and income tax, you do need to consider these gross receipts taxes. We have seen these states kind of aggressively pushing compliance. I just saw an Ohio CAT notice a couple days ago for a client. An interesting one, Alaska is one of 5 states that doesn't have a sales tax. I hear these rumors that they're maybe looking to impose a statewide sales tax. It's just proposed. So if you're selling into Alaska, don't worry about a statewide sales tax, but there are some locals that actually do have a sales tax in Alaska. So just something that we're looking at. This whole expansion of the digital economy, we've been talking about this for a while when it comes to states looking to tax maybe software as a service because they're losing out on revenue from traditional software that was big ticket items for companies that their statutes just needed to get up with the times to tax software as a service. Crypto rules, everyone's been talking about cryptocurrency and how are states handling that and addressing that. And, by and large, what we've seen is the actual sale of cryptocurrency isn't something that is going to be subject to a sales tax, but states do need to have been kind of updating their statutes to say that redeeming crypto for merchandise can be considered a taxable sale, where the crypto should be treated the same as cash. So it's just a fascinating area that we're looking as more and more states try to provide some guidance. And then also just the taxation of virtual services. State statutes that were written 20 years ago to tax a certain service probably didn't imagine that same service might be provided over an online platform. So how do states interpret that? Can the fact that something is provided via a digital kind of screen, can that make it taxable? And so states they're challenged in that they want to tax the Netflixes of the world because before they could tax a DVD, well, they want to tax streaming services, but they're not really looking to tax accountants who are providing services via an online portal, right? So they have to kind of try to bifurcate the two. And so states that's just another challenge that they're facing when it comes to how we work and how we deliver our services. And then also again, if you were providing services in person, you only had to contemplate whether or not that service was taxable where you were. But now if you're providing it online, you have to consider the rules in which where your service is delivered as well. Real-time reporting, this got a little bit of push in Massachusetts, where they were looking to try to make taxpayers remit earlier, right? Instead of kind of collecting all the money for a month and then submitting it in the next month, they're trying to push that up. And if you think about it, there's a time value of money component there. But hopefully that doesn't become a trend in that sales tax compliance on a monthly basis is hard enough. And then having to somehow pay the tax when you receive it or in a few days. So we'll see where that goes. I don't do a whole lot with VAT, but I know that that's something that VAT countries are looking to do too, is to try to accelerate that money that they can get. Mergers and acquisitions is just always an area too to be careful with when it comes to buying or selling, dissolving a business. Most states there are what are called occasional sale or bulk sale exemptions, but not every state has those exemptions. And also the paperwork that's required or the structure of the deal can matter. So it's one of those cases where just don't assume that if you dissolved or sold a business and you got rid of some assets that there is no sales tax repercussions. And then intercompany transactions, we have seen auditors key in on this a little bit more. And I was a former auditor for my home state of Minnesota a long time ago, 10 years ago, where we would generally just look at the entity in which we were assigned the audit. But auditors now are looking at organization charts and they're looking to see if there are transfers between the organizations and if there might be some sort of taxable component to that. Is company A renting something to company B within an organization? If so, there might be a collection requirement there. So something to just kind of consider to look at, the different transactions between entities within a structure. And then lastly, we got a couple minutes here, just what we're kind of watching, or just things of interest. Certain states are looking at how they can potentially fill some revenue holes when it comes to high income individuals, maybe moving from, say, a California to a Florida, and how states are addressing that, or are they trying to look at residency type audits as well too? Because if you work in California, spend most of your time in California, but you have a Florida mailbox, might not get you out of California state income tax. So again, states aren't really letting those high income taxpayers go without a little bit of a fight. And then just the Zoom economy, as I mentioned, how we deliver services. States are just trying to address how they can not have, looking to tax the services that they kind of intended, while kind of carving a line out for states that, for services that they really didn't want to tax, but because they're transferred via portal, may somehow fall under a statute that could tax that services. Vice type taxes, we get some of these questions when it comes to either liquor or tobacco, where there are different taxes than a sales tax. And oftentimes too, when a state looks to, legalize, say, marijuana, they'll tack on a really high tax. Sports betting is an area too that more and more states are looking to legalize, and they'll definitely try to capture some of that revenue through some sort of tax. Is it going to be a gross receipts tax? Is it going to be an income tax? And then lastly too, just the expansion of the locals, and not only just from like a fee or sales tax perspective, but some locals are imposing different payroll type taxes, personal property taxes. So again, it's always worth, especially if you have material kind of activity in certain jurisdictions, to maybe just look and say, okay, what's the universe of potential taxes that are sitting out there? And oftentimes you can just basically Google City of Chicago taxes, and you can get to a landing page to at least start to look at things that need to be considered. And so with that, that ends the presentation that I have it. We got a few more minutes to stay on if there are any questions, or if any of the presenters have any comments or things that they would like to bring up.
I think I learned even more than I thought I could about sales tax today. So thanks, Dylan.
Yeah, and I guess, Bridget, I am one of the few people that does enjoy talking about sales tax all day long, but not the compliance piece of it. Like, I love looking at maybe taxability and talking about different rules, but when it comes to having to do 30 returns or something like that, that can get a little redundant. So
yeah, I agree. I find the product taxability fascinating for like trivia, and it just blows my mind what's could be taxable and what's not.
Bridget, there's a question in the
if you're talking to someone and they can't, you can email me.
It's on the screen.
Is it on the screen? Okay, yeah, email me and I'll get you. We have so we have a US sales tax team who you're probably talking to, and then we actually have a whole team in Europe that we purchased some companies in Europe, and that's our BAT team. So yeah, I'll get you to the right people so they can answer your questions. If you're already a customer, you might just be needing to talk to someone outside of your customer account manager. So just send me an email and I'll get you the help you need.